Hi there, welcome to kneppyinvests. Another company has released their Appendix 4C for the December quarter, and that company is Oneview. And yes, I'm calling this Appendix 4C an historic quarterly report from the company, not overall among all companies on the ASX. In fact, the management of Oneview is taking that stance as well. I'll talk about that during this video. Now, Oneview is a company I've been fairly bearish about in the past. Also talk about that, but just because I have been fairly bearish in the past few years doesn't mean my opinion of the company can't turn around. And I am starting to change my opinion on this company, and you'll be able to see why. And yes, it has something to do with this quarterly report being historic for the company. So let's get stuck into it. And before we talk about why this Appendix 4C was historic, just a few facts in regards to Oneview. The best way to describe Oneview is to define them as a healthcare tech company. They do have a platform called Care Experience that allows caregivers to make real-time care decisions. And probably one of the most interesting thing about their platform is they allow patients and their families to participate in their care. Now, that probably doesn't mean they can tell the nurses or doctors what sort of drugs they will give them. And I haven't really gone that in depth in this platform, but it does bring patients and families more into, I won't say the decision-making process, but it allows them to know what's actually happening with their care. So this platform is used in patient rooms, patient doors, patient chairs, digital signs, and nurse stations. It's empowering patients and families, delivering virtual care, managing patient experience, and optimizing patient flow. There are three main platforms or parts of the platform: the Care Experience Platform Cloud Start, the CXP Cloud Enterprise, and the CXP Enterprise on-premises. Oneview is not really an Australian company. It was founded in 2012 in the Irish city of Dublin, and there was a story about the founder, Mark McCloskey, how he was in a hospital and he just came up with this idea. I think that was in 2008. Founded in 2012. I think the headquarters is still in Dublin, if I remember correctly. And it listed on the ASX 17th of March 2016. So it's nearly been on the ASX for 6 years. And for the majority of that 6 years, I have been fairly bearish about this company. But again, that bearishness could be turning. The CEO of this company is James Fitter. He also has a 2.7% holding in the company. And the founder of Oneview, Mark McCloskey, he has a 3.2% holding. The current market cap of Oneview is a little bit too rich for my liking. $150 million, that's at 30 cents, and just after they released this Appendix 4C. And the T code is one of the most boring T codes on the ASX. It's ONE. Now we get to the part which could explain why I have been bearish about this company over the past 6 years. When we look at their financial performance from 2016 to the trailing 12 months, it doesn't look good. In fact, revenue over that time period fell from $9 million to $7.5 million. Gross margins have improved. In fact, they've improved from 33% to 67%. And the operational cash flow and the loss-making ability of this company was quite extreme. In fact, in 2016, they were operational cash flow negative by $17 million and unprofitable by $16 million. And the market actually did notice that. And we saw a significant decrease in the share price during about a 4 to 5 year period. Now, those numbers have improved over the trailing 12 months. Operational cash flow is down to negative 4.7, and profitability has improved slightly to only loss-making by $9.5 million. They have $5 million of net cash. However, they have been consistently doing capital raisings. In fact, when we look at the last two December quarter cash flow statements, you'll see that they did cash raisings or capital raisings during both of those quarters. Price to sales ratio 20, which again is a little bit too high for my liking. The very fact that this company hasn't proved they can increase their revenue, they haven't proved they can become operational cash flow positive, they haven't proved they can become profitable. Price to sales ratio of 20 is a little bit too high. I would prefer that to be a little bit lower. Now let's have a look at their Appendix 4Cs. But before we have a look at the most recent one, let's just go back 1 year in the past. As we take a look at Oneview's final quarter for their financial year, which is the December quarter, receipts to customers 2.7 million, spending a little bit of money, and their operational cash flow negative by 922,000. Not as much as the previous 3 quarters, because over the whole year, they were operational cash flow negative by $8.3 million. And because they were operational cash flow negative by a lot, it means they did have to do a capital raising. They raised $5.4 million and finished this particular year and quarter with $6.8 million in the bank. As we move forward 1 year exactly and have a look at Oneview's December quarter for financial year 2021, the final quarter of their financial year, things look like they might have turned around. I'll just say maybe turn around, not definitely. But receipts to customers had doubled from the previous corresponding period of last year, up to 5.5 million. And that's okay, that's good, that's what we want. But sometimes when you see receipts from customers double over a year period, you also see cost doubling. But for Oneview, that did not happen. So receipts were up 2.7 million. Product manufacturing operating costs up only 400,000, staff costs up only 300,000, and administration costs up less than 100,000. Advertising and marketing were up a little bit. But when you add up all the increasing in that cost, by far lower that increase than compared to how much receipts had increased. And that meant all that increase in cash receipts, or a lot of it, went down to the bottom line. And that's how this company went from being operational cash flow negative to operational cash flow positive. And even if you look at the whole financial year, only operational cash flow negative by 3.9 million. So there is a potential this company has turned things around. Now, one other thing I want to mention with Oneview's statement of cash flows is they do include working capital movements, which is actually quite important when you're looking at cash flows. And most companies don't include working capital movements. And for Oneview, that was positive 731,000 for this quarter. And that definitely helped their operational cash flow status. And one of the things that working capital movements could be is a decrease in inventory. And so we have to keep a look on or watch out to see how their working capital movements are for the next few quarters. If we see that negative, then more likely they're increasing inventory. And this is one of the reasons why I like to look at least 8 quarters of cash receipts and operational cash flow for a company, just because most companies don't include working capital movements. And it's actually one way management can manipulate the cash flow or the operational cash flow of a company. So you can have a lot of inventory, spend no money on inventory, and inventory goes from a lot to nothing, and then all of a sudden you have this burst of cash flow coming into the company, but there's no inventory. So just keep that in mind. If you only look at cash flows from operating activities, that companies can manipulate it, and not all companies will do that. I would say it's by far a minority of companies would even think about doing that, but it does happen. And probably the other thing I should mention, they also had another massive capital raising in this quarter. They raised $12.7 million, and the cash in the business improved from 1.5 million and finished the quarter at 15.2 million. So they have a lot of cash on hand to do many things, maybe an acquisition, or maybe they're going to become operational cash flow negative again over the next 1 or 2 years, and they need that money for working capital requirements. Now we turn attention to Oneview's receipts history since they listed on the ASX way back in the middle of 2016, and we don't see anything here that we should like. The one thing I am looking for here with receipts history is it going up consistently. Doesn't go up, have to go up every single quarter, but I want to see a trend in cash receipts over time. And if we take away the most recent December 2021 quarter, receipts have gone nowhere over the past 6 years. In fact, you could probably put the trend as a straight horizontal line. So maybe this is a turnaround for this company. I'd have to do a little bit more research. Why exactly cash receipts did climb significantly in this most recent quarter, increasing from 1.4 to 5.5 million. It could be just a 1 quarter blip. and maybe next quarter receipts go back to 2 million or 2.5 million or something like that. So one quarter does not make a company. That's why it is promising that there is that potential that Oneview has turned things around. They have become operational cash flow positive in this one quarter. But whether, or the question is, can they continue this over the next few quarters? Now we turn our attention to the charts for Oneview, and the first chart we're going to look at is the weekly chart for the company going back all the way to when they listed. There was a little bit of hype in this company over the first year or so. In fact, the share price increased from about $3 all the way up to $6. I'm not sure if that was the real share price back then or if Oneview has done a consolidation. And I really, to be honest with you, don't want to do the research on that. But this should point out that there was a long period of time here when Oneview was completely hated by the market, not only myself, because the share price fell from that $6 all the way to nearly 1 cent. It might have been lower than 1 cent at a point in time during 2020. But there was a breakout in Oneview's share price in the beginning of 2021. So things have turned around for this company during the past year. And once we look at, or when we look at the daily chart in the next slide, I'll be able to show you when the sentiment in this company shifted from fairly negative to positive. Back at the start of 2021, the share price of Oneview was hovering around about 4 or 5 cents. But then on the 1st of February 2021, the share price increased 121% in the one day because Oneview Healthcare and Samsung SDC America announced a distribution agreement to offer SaaS digital care solutions in North America. The market loved it over the next few days, and then that hype died away during the rest of February into the start of March, and then on the 12th of March 2021, Oneview announced that Stocks Digital Investor Awareness Agreement and Placement. The market loved that announcement, and the share price increased 100% on that day, and then just kept on increasing over the next few weeks. In fact, the share price rose from about 15 cents all the way up to about 50 cents over a 2-week period. So again, a lot of positive momentum behind the company right at that point. Sentiment had definitely shifted from fairly bearish negative to more bullish and positive. And then the share price kept on increasing all the way to a high of about 57.5 cents during June. But since then, the interest in this company has sort of waned away. Share price has been falling. In fact, it has fallen from about 50 cents all the way to a low of 22.5 cents, which was reached in December last year. But with the release of this Appendix 4C, there is a possible breakout in the share price. We have seen the share price move from about 26 cents to a current share price of 31 cents, which was just before closing on the 14th of June. So even though the overall market is down, the share price of Oneview is up. So overall, when you look at this chart, if you compare from the start of 2021 to right now, the share price has been performing fairly well, but there has been a little bit of negative sentiment coming to Oneview over the past 3 or 4 months. But that's after a long period of time when that sentiment in this company definitely did shift around. I'd like to see what happens with the share price over the next few days, even the next few weeks, because the share price is moving into a bit of resistance, and it will continue to move in resistance between the current share price of 31 all the way up to 50 cents, just because a lot of people would have bought in over the past year at higher share prices, and that is resistance. And when I do like to see a breakout, I want to see the share price move into at least 6 months or even preferably 1 month high. And the share price of Oneview right now is only about a 3-month high, not that 6 months to 1 year high. That's all I have for this historic Appendix 4C for Oneview. Did I even mention why this Appendix 4C was historic? Well, it was historic because it was the first operational cash flow positive quarter for Oneview, and the management of the company really pointed that out in the commentary of the Appendix 4C. So potentially company changing a quarter for Oneview. The question is, can they continue this momentum over the next few quarters? It remains to be seen. If you have any questions about Oneview or any other company on the ASX, just leave that question in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.